Let us look at this particular problem. It says Y Limited opened a new branch at Badudara on 1st January 2009. So remember, it's a new branch. It's being started on 1st January 2009 and goods are being sent by the head office to the branch at 25% above cost. Then all the expenses of the branch are met from the branch cash account itself, and the balance are being remitted to the head office, and the branch sells good both for cash and on credit. Then you have to prepare the various necessary ledger, so it means that we have to do under the stock and data system to find out the profit or loss made by the branch during the year. And we have to assume that the branch does not maintain double entry books of accounts. So now let's look at the various items under the problem. So the first one is cost of goods sent to the branch. It is for rupees 1 lakhs. Remember, they have given you the cost of goods being sent to the branch, not at invoice price, but at cost price. So again, the next item is the goods received by branch till 31st December 2009. That is for rupees 90,000. So remember, the cost of goods sent is rupees 1 lakh, but till 31st December 2009, at invoice price, I have received rupees 90,000. So it means that there's still goods in transit. Then the normal loss during transit at invoice price is rupees 5,000. Then the closing balance of debtors is 10,000. The closing balance of cash is 4,000. Then cash being sent by the branch to the head office is 90,000. Then cash being sent by the head office to the branch is rupees 5,000. Then the expenses by branch is rupees 10,000. The credit sales is 95,000. Then bad debts and allowances to customers rupees 1,000, and the closing stock is rupees 20,000. Now let us look at the first ledger, that is a branch stock account. So under the branch stock account, all items related to stock will be shown under this ledger. So since it is a new branch, if you look on the debit side, there's no opening balance. So it started with the goods sent to branch account. That is for rupees 1,25,000. So this 1,25,000, it is at invoice price. So it means that the cost of goods sent to branch is rupees 1 lakh. So since it is above cost for 25% above cost, so we have to add 25% on rupees 1 lakh. So 1 lakh plus 25% of rupees 1 lakh, we get 1 lakh 25,000. So this 1 lakh 25,000 is the goods sent to the branch at invoice price. Then if you look from the credit side, it starts with the first item, that is by branch cash account, that is the cash sales. So if you look again from the problem, the cash sales has not been given. So this cash sales, will get it from the branch cash account, which we'll see later on how much do we get, or how do we get this rupees 15,000. Then the second item is the branch debtors account, so that is the credit sales for rupees 95,000. Then the next one is the branch adjustment account, that is the total amount of normal loss which has been transferred to the branch adjustment account for rupees 5,000. Then we have the stock in transit account for rupees 30,000. We'll see how do we get this from the working note. Then the closing balance of stock for rupees 20,000. So since the debit side is greater than the credit side and there is a normal loss of goods, so the remaining balance will be transferred to the branch adjustment account as apparent profit. But remember, as I've told you in the previous video, if the debit side is greater than the credit side and if the opening stock and closing stock has been given, so it will be a deficit in stock. And if the credit side is greater than debit side, if the opening stock and closing stock has been given, so it will be the surplus stock. But in this case, since there is a normal loss, the credit side is greater than debit side, the remaining balance will be the apparent profit, and it will have to be transferred to the branch adjustment account. So let us look at this working notes for number one. To make it very simple, so we know that the goods are being invoiced at 25% above cost. So to get the invoice price of goods sent to the branch will be 1 lakh plus 25%. We get 1 lakh 25,000. Then regarding adjustment number two, this is treatment of normal loss. So the entire amount of normal loss will have to be transferred to the branch adjustment account in full. Then the third one is regard to stock in transit. So while sending the goods, if you take at invoice price, the head office has sent at rupees 1 lakh 25,000, but at the end of the year they have received only 90,000. Then in transit there's a normal loss of rupees 5,000. So the stock in transit will be the invoice price of goods sent, then minus the normal loss, then minus the invoice price of goods which are being received by the branch. Will be 1 lakh 25,000 minus 5,000 minus 90,000, we get rupees 30,000. So now the next ledger is goods sent to branch account. So we'll start with the credit side. So by branch stock account, which had been transferred from the stock account for rupees 1 lakh 25,000. And remember, this is at invoice price, so the loading will be transferred to the branch adjustment account. So it'll come on the debit side to branch adjustment account, that is the loading. So rupees 25,000. And since the credit side is greater than debit side, the remaining balance will be transferred either to the trading account or to the purchase account. Now the next ledger is the branch adjustment accounts. Remember, under the stock and data system, all loading will be shown in the branch adjustment account, that is loading on items related to stock. Now we'll start with the credit side. So the first one is by goods sent to branch account, that is the loading on goods sent, will get from the debit side of the goods sent to branch account. So it has been transferred to the credit side, 25,000. Then the apparent profit from the stock account. Then on the debit side, we have to branch stock account, that is normal loss being transferred from the branch stock account. Then we have the stock in transit account, the loading on stock in transit. So the stock in transit appears on the credit side. So the loading will appear on the debit side. So the loading will get 30,000 into 25 divided by 125. That is, we'll assume the cost price is 100. The profit will be 25 and invoice price will be 125. So to take away the profit out of the invoice price will be 30,000 into 25 by 125 gets 6,000. Then the last item is the loading on a closing stock. So loading on closing stock will be 20,000 into 25 by 125 to get 4,000, and it has to be transferred to the stock reserve account. So in this case, they have written to balance carried down. You can also write to stock reserve account. It doesn't matter. So since the credit side is greater than the debit side, you will be a gross profit which have to be transferred to the profit and loss account, that is for rupees 50,000. Now the next ledger is the branch debtors account. So since it is a new branch, there is no opening balance. But if you look on the debit side, you have to branch stock account, that is the credit sales being transferred from the stock account. Then on the credit side, by branch cash account, so this is the cash collected from debtors. So if you look from the problem, the cash collected from debtors has not been given. So the remaining balance from this ledger will give the cash collected from debtors for rupees 84,000. Then the bad debts and allowances being given in the problem, so they have transferred directly to the branch profit and loss account. Then the closing balance of debtors has been given, that is 10,000. So since the debit side is greater than the credit side and the cash collected from debtors has not been given, so the remaining balance of 84,000 is the cash collected from debtors. The next ledger is the branch cash account. So there's no opening balance of cash, so they'll not find balance brought on the debit side. It starts with the first item to bank account written from head office. It means that the cash received from the head office by the branch is rupees 5,000. Then the branch debtors account, that is the cash received from debtors, which has been cross entry for rupees 84,000. And the cash sales, which is the balancing figure out of this ledger, because in the problem the cash sales has not been given, so the remaining balance of this ledger will present the cash sales. So now if you look from the credit side, we have a branch expenses account which has been given in the problem for rupees 10,000. Then the amount of cash which has been sent by the branch to their office for rupees 90,000. Then the closing balance of cash is 4,000. So since the credit side is greater than debit side, let me repeat it again, and the cash sales have not been given the problem, so the remaining balance represent the cash sales. Then the next ledger is the branch profit and loss account. So this has been cross entry or cross transfer from the branch adjustment account, that is the gross profit rupees 50,000. Then this 10,000 is the branch expenses account, so you can write here to branch expenses account for rupees 10,000. Then the branch debtors account for bad debts and allowances, which has been cross entry for rupees 1,000. And since the credit side is greater than debit side, the remaining balance will be your net profit, which has been transferred to the general profit and loss account. So if you look at working on number 4, it says apparent profit. So there they have explained it clearly. I hope you understand. So thank you.